this from the Haryana bench. In the case of RHI Magnesita India Limited. So the case is very interesting. In this case, the appellant raised some fund by way of issuance of shares to QIP, which is Qualified Institutional Placement Program. So through the QIPs, they raised some fund, and they for this QIP they had to incur some expenses. They engaged HSBC for advisory and other management services. So on that expenditure, they paid some taxes, and they wanted to get a clarity whether they are eligible for the input tax credit on such expenses. So they approached the advanced ruling authority. Advanced ruling authority looked into the same, and only on the single line that this is not the case. In this case, this expenditure are not in the course or furtherance of the business of this applicant. So they said that entity is not eligible for the input tax rate on the same. So the applicant went to appellate authority, and they submitted on various aspects. One being that the advanced ruling authority did not analyze the statutory provisions and did not give consideration to the submissions. Basically, it was a non-speaking order. And second, on the merits, they submitted on a few things that it is in the course of furtherance of business. This is satisfying section 16 of CGST Act, and all the conditions being satisfied, the ITC should be allowed. They also relied on to various judicial precedents where this was held that these fundraising activities are in the course or furtherance of business. So for that, they said that it is to be ITC to be allowed. Now, one of the important fact in this case was the use of fund. So the fund raised was used for one for the purpose of repayment of some of the existing debts of the company, and some portion was used for investment in the 100% subsidiary of the company, which is DOCL. So Dalmia OCL Limited. So the appellate authority, after analyzing all the provisions and all these submissions, they held that for the portion which is being utilized for the reduction of debt or for payment of debt, this qualifies as this is eligible for input tax credit, and hence the because it is in the course or furtherance of business, reduction of debt will reduce the financial state and it will strengthen the overall business of the entity. So it is eligible for credit. Regarding the remaining portion, which is being used for investment in subsidiary, the appellate authority held that it is not in the course or furtherance of business of the holding company, but in the course or furtherance of the subsidiary company. So it is not eligible for input tax rate as section 16(1) is not satisfied. And on that, they said that proportionate ITC with respect to the this fund used for investment in subsidiary is not allowed. So this was the conclusion. Mohit, I have 2 points on this, but before that, I would like to know your views or your points, if any, on this judgment.
So I think this kind of over analysis, I would use the term over analysis of the term business in the course of business is what the government intended to do away with when they brought in GST, because in Senvet regime the precondition of ITC was very different. So there the precondition of Senvet was that the supplies input or input service should be directly or indirectly used in providing the outward service or the manufacturing of the product or provision of outward service. In GST, they changed that precondition to say that the supply should be in the course of business. So the basic intent of the government was that any expense that if even whether directly, whether directly, if it is in the course of business, it should be allowed. And we have various judgments from income tax law wherein it has been held that tax department cannot question the business expediency, business rationale of the businessman. So if businessman believes that a certain expense is in the course of business, then it is in the course of business. The basic intention of the government only was that personal expenses should not be routed through business just to claim the credit. I think that was the basic intent of the government. but the that was never the intent that government officers start or government authorities, be it a advanced ruling authority or appellate advanced ruling authority, to question whether certain transaction which were for certain meant to be in business in normal course of business, they were never meant to question whether those are necessarily in the course of business. So in this case, if I am a holding company, I am raising some funds, I am investing in my subsidiary company. From my perspective, that is in my course of business. So even though directly subsidiary might benefit from them, but as a holding company, I will get dividends on those investment. I might get some other ancillary benefit from that investment. So whatever I have done in capacity of a holding company, I believe that is in the course of business. So to that extent, I would disagree with the finding of the appellate authority and this
Uh,
restrictive interpretation of the term business.
Fair enough. Mohit, I have 2 points because on these kind of issues, department also take a view. I don't know in this case whether department submitted that or not. Many a times, or I would say most of the cases where department sees this kind of transaction, they say this is a transaction in security because you are selling shares. You are ultimately selling shares. So they say it is a transaction in security and it is exempt supply. And on that, they ask for the reversal. This is the first thing. So law, as per my understanding, as of now, there is no exact clarity whether it should be considered as exempt supply because this is ultimately sale of securities, or whether it should be considered as financial activity or overall financial activity of the company. So it should because sale of security, the law does not say it should be sale of security which you are holding for some other company, like as an investment. So that is one thing. And second aspect, even if it is to be reversed being a non-business purpose activity, in this case, which the Honorable Appellate Authority has held, as per Rule 42, for the ITC, which is being commonly used for both business and non-business, only 5% is to be reversed. So correct me if I'm wrong. So that aspect has not been discussed at all in this ruling. So on both these aspects, what are your views?
Yes, so I think that 5% clauses for those conditions where the common credit has a portion of ITC which is for non-business purposes. So in case we can identify on an invoice level basis that whether this is eligible or not, I think in that case that 5% clause will not come into picture. All
Yes, it will. Yes, it will not come into picture. But if I am collecting fund, if I'm raising fund, let's say I've raised 100 crores. Now I have some fund for my business also. I have my bank account, a fund in my bank account, some from some other sources also. Now I have accumulated the entire fund, and some fund I'm using for the this investment and subsidiary, and some I'm using for this reduction in my debt. So there is no specific identification which amount I'm using for this investment in subsidiary. So ideally it should be treated as common only.
so see, keeping aside my argument, because if we go with my argument, then entire amount is in the course of business. So keeping aside that argument for the time being, so first thing is if I am only making an investment, so there is only a purchase of security being done. There is
Right.
no sale of security.
Correct.
So in that case, that explanation, because section 17.3 says that sale of security will be treated as a exempt supply for the purpose of section for the purpose of this whole ITC chapter.
Although 17.3 uses the word transaction, but the explanation say 1% of sale value.
So see, we have to go by what law says.
Correct.
So if law says that you have to take 1% of sale value, that is the only criteria we can use. We cannot use some other criteria.
Correct.
And when they have said, so when they have given a deeming fiction, it is also a stated law that when a deeming fiction is given, it has to be given full effect. So for the purpose of all the sections of ITC, complete chapter of ITC in CDST Act and CDST rules, we have to assume that a transaction in security is a supply, is an exempt supply.
Right. Right.
So if I am doing some activity for facilitating transaction in securities, then it is in the core. I am doing taking that input service for effecting a supply.
Correct.
So then I cannot say it is not in the course of business. So by saying both these things, the authority is also contradicting its finding, because
Correct,
either I
correct,
say
correct.
that it is not in the course of business, or I say that it is used for effecting tax exempt supply, even though that exempt supply is only deeming fiction. But for this part of this chapter of CDST Act, it is applying. So if it is used for effecting exempt supply, then it is in the course of business. I think that takes care of the first condition, that section 16(1) is not satisfied. So I think that is satisfied. And since there is no sale of security, so the machinery provision fails. So even though as per provision of section 17(3), some reversal might have to be done. But since there is no machinery provision to calculate ITC reversal in case of only purchase of security, no ITC reversal will accrue. And I think so. This is another ground which we have discussed often, that this kind of
Iba tayo
even
dati
in
pala
case of redemption uh, or issue of shares. So in that case also we have discussed many times that this clause should only apply when there is sale of security. Even from subsidiary company perspective, when they are issuing the share, even then this should not apply, because issue
Ama
of
start
share
అయిపోయింది కదా
and sale of share is different. Issuing of your
ఓయ్
own
ఓయ్
share and sale of some shares of some other company on an open marketplace like share market, on some platform, that is different, and issuance of your own share is different. So in my view, even in that case, that condition of section 17(3) will not get satisfied. So 17(3) will
And
not be attractive.
one more aspect that can be say considered over here, maybe a very far-stretched argument that securities become when we talk about transaction in security or sale of security, a share become actually a security when it is listed. So unless I have sold it, no, unless somebody has purchased it, if it is my own shares, it is not a security at the first place. So can we argue on that aspect also?
Yes, I think that is the main ground to say that issuance of security is not sale of security, because it will become security only
It's
after it
only
is issued.
right, right, absolutely, absolutely. So this was the first judgment. Mohit, would you like to take up the second one?
Yes. So second judgment we have in the case of Dow Chemicals by G-Stat. So in this case, the facts were that there were two group companies, Dow Chemicals. One company is Dow India, which is located in India, and one company is located outside India. Both are group companies. So the foreign company, Dow Europe, they are basically acting as a procurement source supplier for Dow India. So what Dow Europe is doing, they are undertaking a lot of activities like identification of suppliers, selection of supplier, approval of suppliers, negotiations of the agreements, procurement agreement between Dow India and the foreign supplier, then further facilitation of supply from those suppliers to Dow India. So in this case, and so they treated this transaction as import of service. They paid GST on that, and later on the company realized that it should qualify as an intermediary service, so GST should not be paid, and they went for refund. So that is from where the whole dispute started. So in this case, what the court held that for intermediary service, the primary condition is the primary focus of the intermediary should be to connect the supplier and the recipient. But in this case, Dow Europe, they are undertaking a comprehensive set of activities which is not limited to facilitating a supply between the ultimate supplier and ultimate recipient, or only connecting ultimate supplier and recipient. They are undertaking a lot of activities, including selection, identification, approval of foreign supplier, negotiation of terms and condition, facilitation of supply from selected suppliers. So this is the reasoning they have given. Uh, Although I am somewhat agreeing with the conclusion of the judgment, but there are a lot of arguments or conclusions given by judgment with whom I do not agree with. So I'll just recapitulate the final conclusions in brief. So the judgment also referred to another judgment given by Karnataka High Court in case of Columbia Sportswear India Sourcing Private Limited. So in that judgment, so in that case, the role was reversed. The Indian entity was giving services to the foreign entity. So in that context, Karnataka High Court held that Indian company is doing a host of services because again they are not, their service is not limited to facilitating the supply, but they are doing a lot of services like customer support services, backend sourcing. So these kind of services are being done. So uh, in that set of facts, it will not qualify as intermediary services. Now, if we go back to service tax regime, in service tax regime also, this was a very big conflict because of intermediary services. And most of the time, it used to be from export of service aspect. So there, the tribunals as well as High Court, Supreme Courts have consistently held that if the purpose of the intermediary is solely to connect the supplier and recipient, identification of supplier, connecting the supplier to the recipient, or vice versa, identifying the recipient and connecting to suppliers. So in if the primary focus of intermediary is those services, then it will qualify as a intermediary service. But if the intermediate, if the person is undertaking more activities, not just limited to that, so we have lot many judgment on market research. If there is some Indian entity, he is doing some market analysis, market study, market research, giving those reports to the uh, foreign clients. In course of that report, they might also identify some potential customers. They give a list of that customer to the foreign client. So till that stage, the courts have clearly held it is not an intermediary service. In this case, so what they one observation by the tribunal was that these two are group companies. So Dow India and Dow Europe, they both are group companies, and the entity of Dow Europe was specifically set up for providing these kind of service. So that is why it will not qualify as an intermediary service, but rather a core service. So with this observation, I disagree a little bit. So whether the companies are related or unrelated, that should not have any bearing on the contract between the parties, unless and until we can prove that because of the relationship they did something which was not given in the contract. So if the parties have done exactly what is given in the contract, whether they are related entity or not related entity, that should not have a bearing on the nature of the transaction. Second observation which they have given is in the agreement they had mentioned that it is a independent. So these supplies are done on a principal to principal basis, and Dow Europe is not an agent of Dow India. And they have said that so this means that Dow Europe cannot bind Dow India, and therefore they are not an agent of Dow India. So I feel this, even though this, so I think if someone is an agent of another party, so if I take my example that Gopal wants to buy something, I am acting as an agent of Gopal, then I might qualify as a intermediary for Gopal. But the reverse is not true. So even if there is a agreement between me and Gopal on a principal to principal basis, because what does definition of intermediary say? That I have to facilitate the supply. So what does facilitate mean? That even if I'm identifying someone, giving their contact detail to Gopal, that okay, this is the person I think you can purchase something from, and even if my role finishes there, I give the contact information. Gopal contacts them. Gopal and the customer, then they negotiate. They set the terms and conditions. Still, my role, I connected both of them. So I should still qualify as an intermediary. And typically, in all these kind of contracts, it is normally you would find it is always written that this transaction is on a principal to principal basis. Because the reason for that is Gopal is engaged Mohit Gupta for a limited purpose. That you go out there and you identify customers for me. Gopal does not want Mohit Gupta to represent Gopal on his behalf. So just because I do not Mohit Gupta, I does not have the authority to represent Gopal or to bind Gopal for my actions. That only means that I am not an agent of Gopal. But the definition of intermediary is much broader than agent. So even if I'm not an agent, even though the contract is on principal to principal basis, I believe the contract can still qualify as a intermediary services. So, see, all in all, I think these are some of the factors. So, whenever we talk about intermediary services, there are several conditions we have to see. So, one is obviously principal to principal or principal to agent relationship. Second is remuneration, whether it is a pure commission or some fixed cost plus markup or some other parameter of fees. Then actual scope of work. So we have to see all these parameters holistically. We cannot go just by one factor and say if it is pure commission based, then it is intermediary service. If it is not, then it is not an intermediary service. So we have to keep all of these factors in mind. So even though I believe that the tribunal have given the right decision, but some of the factors they have considered in the wrong manner from my personal point of view. Anything you have to add, Gopal? You are on mute.
With these kind of transaction, with respect to whether it's intermediary or not, before this 2026 amendment, so this is actually very interesting. Like, if the same transaction had happened in India, there would be an argument that this is intermediary. This is not an intermediary. It should qualify for export and we should get the benefit. Now, when it is from outside India on the RCM perspective, it is being argued that it is intermediary and hence there should not be any tax payable. So this is one thing because I was discussing this judgment yesterday with one senior professional. So he said that I don't agree with this judgment. As you rightly said, that conclusion part, I also agree, especially in light of the fact that most of these kind of cases, when the domestic parties is arguing that it is not an intermediary and we should get the benefit, and that whole story for around 9 years, and then the amendment was introduced. So I think from the conclusion perspective, I agree. Regarding your point on the agent or the even if not an agent, not a typical agent, I think this circular 159 also tries to address this, that it should be somewhat in the nature of agent. It cannot be pure somebody. Like it says that there should be a minimum of three supplies. So I am supplying as an agent. I am supplying as an intermediary my services, and I'm connecting the buyer and the seller or the supplier and the recipient for their supply. So from that angle, I also agree with you. But there's one more aspect in this judgment. If we read some near the conclusion para, they said that although I don't know why it was relevant to discuss that point in this judgment, but because the conclusion was anyway against the SSE, so the department said that refund cannot be allowed because the taxpayer has already paid and now it is an afterthought. So the Honorable Tribunal said that it cannot be considered as afterthought because the law provides for refund of payment of tax or excess payment of tax. So when the law itself provides a procedure or the provision for that, it cannot be considered as afterthought. So will that, because the judgment is otherwise not favorable for the SECs or the taxpayers, but whether this will help in the this particular remark, because it cannot be considered as a ratio of the judgment. So can it be helpful in other cases, or do you see any use case where this kind of remarks can be used to refer?
So I don't think it is a remark. It should be considered as a ratio because they have clearly mentioned that we do not agree with the impugned order to the extent they say refund is not admissible. So it is not just that they have passed the remark, they have expressly said that to the extent they are saying that refund is not available, we do not agree with the order. So I think to that extent they have effectively set aside the order, but since the larger ratio is in favor of the department in this case, this minor point was wiped out by the impact of the larger point because larger point was in favor of the department. So that's just like saying if I went to tribunal for some case and tribunal is saying that on merit your case is weak, but on limitation it is strong. So on limitation I am allowing. That is why on merit, even if it is against the assessee on merits, tribunal will not care because on limitation it is set aside. So similar in this case, I believe that the on refund part, the tribunal has given its ratio. But since the larger point, that whether it is import of service or intermediary, on that point it is in department favor. So the minor point, effect of minor point got wiped out because of that. So it should be considered as a ratio.
Okay. fair point. Just being a devil's advocate side. If I remember, there is a Supreme Court judgment, a very old judgment, Skills Lotto. Old in the sense ki, not in the context of GST 18. So this, in that case, the Honorable Supreme Court was dealing with whether the this actionable claim or something, whether it's good or so. So there they said when the particular remark or particular observation is related to the conclusion, or that remark was or that observation was necessary to arrive at a conclusion, then it becomes ratio. So they were discussing whether it is obiter or is it a ratio. So maybe from the department side or maybe from the other side, one can argue that this was not necessary for the conclusion, so it is not a ratio. So that is my limited submission on that. Maybe how this would be used in other cases, because there are many cases where the taxpayer has paid tax under the impression that it is payable, but it was not payable, or subsequently, like the ocean freight case or something. So, or subsequently, ocean freight to different aspect, but they realize that DRC 3 say they have made payment, and later on they realize we could litigate this. So department says there is no concept of payment under protest in GST. It was there in erstwhile law. So in those cases, we can take the help of this particular observation in this judgment.
So, yes, so I agree. I think the larger point is still refund provisions.
Yes,
So
yes.
whatever time conditions have been given, that 2 years unjust enrichment subject to all those provisions, an assessee is always open to file
Always
a
open.
refund.
Right, right, right. So we'll move to third case. Third case is again ruling from the Appellate Authority of Advanced Ruling. This is from the Rajasthan bench. SBF Ispat Private Limited is the appellant. So in this case, the when the appellant is a manufacturer of different type of steels, TMT bar, etc., and the appellant also has set up a solar power project where it produces the electricity for making the steel products. But the solar power plant is located at one place, whereas the factory for manufacturing the steel or the steel plant is located at some other place. But both are under the same registration, under the same GST, and added as place of business principal and the additional place of business. Now, the in this case, the electricity that was being produced at the solar power plant, the appellant was not directly transferring it to this production plant, but to the discom, and the discom was further providing it to the steel plant. And in terms of the arrangement between the this SBF and the discom, whatever electricity what the SBF itself was providing. So ultimately, let's say Discom was providing the electricity to the power plant. Now, if some electricity is used from the electricity provided by SBF itself, that was being reduced from the total actual consumption from the discom to the this power plant. So basically, the this SBF was getting the credit of the electricity that its own plant was producing. The SBF approached the Advanced Ruling Authority seeking clarity on whether the ITC used in setting up of this power plant, or the inputs or the materials used for this entire electricity production, whether that was eligible for credit or not. The contention of the appellant was that the electricity that is being produced, it is not being supplied as an exempt supply, rather it is used as a rather it is captively used for the production of ultimate taxable goods. The first authority, the Advanced Ruling Authority, uh, ruled against the applicant and said that it is not allowed as input tax credit, because ultimately the electricity which is being produced, it is an exempt supply. Then the appellant reached out to the appellate authority, and after framing all the three questions which were raised before the Advanced Ruling Authority, the appellate authority also ultimately held that it is not allowed as ITC. The observation, because the appellant was ultimately giving the this electricity to discom, and Discom was giving the credit to that extent of the electricity from the actual consumption. So they said that ultimately what the this SBF is giving to Discom, it is an exempt supply of electricity under GST, and in consideration, they are getting the credit of the this credit from the Discom, and they have the appellant himself has characterized this as a transfer of credit in lieu of electricity. So they said that it is a mode of supply, and hence the ITC is hence it is since it is a supply and this electrical energy being exempt under GST, the ITC is not allowed on that, and accordingly they ruled against the assessor. So this was the judgment. I personally have a view. They also mentioned that there is no wheeling and banking arrangement between the appellant and the Discom. So they said that this is a pure transfer. This is not wheeling and banking, which is just to store or route the energy. So they said that it is not. The other judgments are also not applicable, which were cited from the existing law, that is the excise law. So. Uh, Although from the conclusion perspective, what they have said that if it is an exempt supply, ITC is not eligible. But to arrive at the conclusion exempt supply, they have said that other judgments. So I think the this agreement, because this was characterized in the application as transfer of credit in lieu of the electricity, they said the appellant is bound by this characterization now. So to that extent, I disagree, because maybe they could have discussed more on the terms of the actual arrangement or the intent behind those arrangements, because the judgment from the previous law, there are various judgments where they have said when the electricity is produced and used for the captive consumption, even if you are routing it through some other this entity, but ultimately it is used for your own production. So it should not be considered as exempt, and ITC should not be disallowed. So what's your take on this, Mohit?
So I think whenever we talk about any specific industry or any specific practice, we have to look at the practice of the industry. So how this whole system works? We have a very India has a very state of the art electricity transmission system, especially from these manufacturing factories type of premises. So one setup is obviously where a factory has their own facility to transmit the electricity which they have produced from whether it is a solar source or some other source. If they have their own facility to transmit this facility to the factory, then it is well and good. I think on that aspect, no one has given any argument.
No dispute is there.
So they, to that extent, everyone agree that even if the intermediate product is an exempt supply, as long as the final product is taxable, ITC is available. But now what happens when the factory does not have this proper infrastructure? So there the electricity department already have an infrastructure in place where they have the transmission lines connected to the factory itself. So what they are saying to the assessee is you don't need to store or the transmit directly to your factory. And even the supply of electricity from solar sources is irregular. On some days you might have good sun, you might generate a lot of electricity. On some days you might not have. So even though there is no formal wheeling arrangement in place with the department, the ultimate objective of the assessee is only to use the captively use the electricity generated. So even all this is different mode of operandi, I would say. That whether whether they are given the credit, whether they directly use the electricity using their own transmission lines, whether they have some sort of formal wheeling arrangement in place, banking and wheeling arrangement in place, whether they do not have such formal agreement in place. End of the day, the objective is that I want to use the electricity which I have generated for my own purposes, just because I do not have the capability to transmit that electricity from my source to my destination. I am using the facilities of the state electricity department or central electricity department, whoever. And I have agreed to a methodology with them that because see, electricity, once it goes into the grid, there is no individual identity of the electricity. That this 10 kilowatts of electricity generated by me. This is going through this wire and to this source. Once it has gone to the grid, it has gone to the grid. So then after that, just to quantify if they have come up with came up with that mechanism that we are giving you 10 units for that which we will charge you 1,000 rupees, whatever. And out of that 10 units, if you yourself have generated 6 units, so we will give you credit of the 6 units. So that ultimately means that they have just returned the 6 units I have generated. If I had supplied more than 10 units, more than my consumption, then I would have agreed that then that would have been classified as a supply of exempt product from assessor's end. But as long as the supply of assessee is less than the consumption, and only the credit is given for the electricity given by assessee, that should tantamount to captive consumption only, and not an supply per se of an exempt product.
Right, right. Agreed, agreed. Because it's just like I'm not doing it directly. And I'm not charging any additional consideration. Like I'm giving you 10 units and you are giving me, because I'm giving you something, you are giving me like a profit, which we call in other industry like markup or something. It is not there. So in effect, it is only storage which I am doing. Just because there is no wheeling and banking arrangement in place, they have discarded the reliance on other precedences. So to that extent, I disagree.
So I'll just give another example. Just I'll take 1 more minute to clarify this. So let us say that I have my own factory and I am manufacturing some product like CNG or petrol, and I do not have any means of transporting that. So I go to Gopal. Gopal has a bigger factory. He has proper means of transporting all those things. So I go to Gopal that today I will manufacture 100 units of petrol or 100 units of CNG, and I want you to transport. So what Gopal does is Gopal has a big tanker in which there is 1,000 liters of petrol. So Gopal comes to my factory. I just add my 100 liters in that tank, and the product is of uniform consistency. The product of Gopal and product of Mohit Gupta, they both are like essentially same product. So I just mix that product in the tanker of Gopal. Gopal goes to my customer, and there he extracts that 100 units of petrol, which is from that common pool now because there is no individual storage. So in that case, I cannot say that I have done a supply to Gopal and Gopal has further done a supply. So just because there is a common facility being used and there is no individual identity of the product, does not mean that that should, and there is a set of mechanism because that is the main stand of the department that credit is being given rather than writing in the bill that I will charge you for 4 units. I am writing that I have supplied you 10 units and I am giving you six credit of 6 units. So just because I am representing it in such a way, it cannot be said that there is a supply of exempt product.
Right, right, right. Right. So Mohit, this with the case laws, there's one update, but that is actually GST portal advisory, and that has been given on 17th of June. So, but that's on the aspect of e-way bill and this SIP to GST and mapping in the e-way bill. Earlier on 20th of May 2026, they had issued that this is required and it will be effective from 1st June, but I think they have delayed it. And now they are saying it is from 1st of August, and on 17th, they have issued a detailed advisory on mapping in different cases, SIP to GST and mapping in different cases. In case where IRN and e-way bill are generated together or e-way bill is generated using IRN. So that is actually technical and needs to be carefully implemented or integrated with the accounting or e-way bill systems. So I think we can share that advisory in the group itself rather than discussing. I'm skipping that discussion because that is one by one. I'll have to just discuss the error codes and all. So we'll share the advisory in the group, and that will and accordingly the viewers can take their position, change their systems or whatever modification is required.
Agreed, agreed. We'll just
Yes,
share the advisory in group.
yes. And Mohit, now we because we'll keep the case laws discussion a bit short today because we are on the last week of this last week or second last week before the deadline to file tribunal appeals is near. So we would like to have discussion on different queries if the viewers have, or few of the points that we can discuss from our and also Mohit. Some defects, some experience on GST80 portal, and what is the current status, how the taxpayers or the professionals should approach the filing when the deadline is almost near. It's just 10 days left. So, would you like to share some points on this, or we can directly take questions from the participants?
So, you see one, uh, so from two, three sources, because we were also in discussion with the office of GST president regarding a lot of difficulties which is being faced by the professional. So even though till now we haven't gotten a time to meet with the president himself, but from two, three sources, what we have heard is that the tribunal is also very actively thinking about working on all these issues which are being faced. So initially, they are not going to be very particular and very difficult about small procedural issues. And even the president issued a issued an advisory in January, instructing all the other benches that do not take the procedural defects very seriously. Only where those defects have a material effect on proceeding, only in those case ask the assessor to get it rectified. Otherwise, mainly for procedural issues, do not raise the defect memo. And I think they earlier that was for a few months, and then they extended it to December. So apart from that, also there are a lot of issues which are being faced by the professionals, and tribunal is actively working on those. I think one of the major changes aligning the CGST rules and GST 80 rules regarding uploading of a signed copy, because that has been a major point of contention. So if you see CGST rules, it basically says that if the copy of GST order, whether it is the adjudication authority order, whether it is first appellate authority order, if the order is available online, then you do not need to upload a signed copy. But if we see the GST 80 rules, as per those rules, whatever order against which we are filing appeal before the GST appellate tribunal, we have to upload a signed copy. And even the signing provisions are there are three different provisions in two, three different places, and they seem to be contradicting each other. So in some cases, they have given the power to assessee as well as the representative. In some cases, they have asked the representative only to sign. So there is some contradiction between those rules, among those rules also. So what I've heard is the tribunal is proceeding to aligning those rules with CGST rules itself. And any which case, GST 80 rules cannot override CGST rules. So GST 80 has complete power to notify whatever rules they want, whatever they deem appropriate for their functioning. But those rules have to be under the framework of CGST Act and CGST rules. They cannot override those rules. So I think that is one of the major practical issues which is being faced by everyone. And I think lot many issues are there when we go to practical filing. So technical problem, there are a lot of technical problems are there. That affidavit issue is there. So there is no mention of any affidavit wherever. If you see GST rules, GST 80 rules, GST Act, there is no mention of any affidavit. But on GST portal, it requires you to upload. So earlier it used to be mandatory, but I've just been informed by Gopal only that maybe now they have removed the mandatory mark. So maybe now it is optional. So I think if that is optional, then that is well and good. But earlier also when it was mandatory, what we used to do is either we used to upload a blank document or we used to upload a document just saying that there is no need of affidavit and there is no format of affidavit also. So, I think though, apart from that, see, lot many issues are there. I mean, Gopal has also filed some appeals. So Gopal has also been very actively working in GST 80 appeals. So I'll let Gopal. Uh, so Gopal, you can go ahead with the other issues which you have faced, and then
Yes,
maybe
Mohit.
we can take up the query. I think Shweta has asked some queries also.
Definitely, Mohit. Mohit, I would just take two, three points. I'll discuss two, three points just in quickly 2 minutes. One is the when we are filing the appeal, there is like many people have a confusion or uh, this they are not clear as to who shall be the respondent. So the rule when selecting the respondent, what should be the how should we decide who is the respondent? Whether we should add the adjudicating authority or the appellate authority as a respondent, or both, or the as per the rules it says commissioner. So in case of this CGST, we can select the commissioner, appropriate commissioner. But in case of this state authorities, when there is a single commissioner in the state and there are additional commissioners or this other special commissioners, etc., who shall be the commissioner. So, law CGST GST procedure rules clearly says that we need to add the this commissioner as a respondent. And when we file the appeal, it directly shows the name of the respondent. Auto selected is there, and the commissioner will be auto selected. So just ensure that. And if one wants to add other person as a this respondent, it is recommended if they want this to be informed to others. So for example, the adjudicating authority started this recovery despite filing the GST-80 appeals because they are not aware, or they say that you never informed us. So it's better to we can add the other respondents also, but primary respondent should always be the commissioner. And there are various portal issues, like portal gets logged out automatically. So it's a long form. It's not like you file one thing and save and then second thing and save. So every tabs you have to file appeal and detail or the case details. You will have to fill everything and then only you can save till that page. So it is very much suggested that there is an Excel template on the portal, down GST80 portal itself. Download that Excel template, fill the details in that template, and ensure that you are filling the details as per the word limits, etc. And once you are uploading on the portal, just copy paste there, save, so that once you are filing it, if you directly file on portal, it gets auto logged out, so you don't have that backup of whatever you have typed or you have uploaded there. So that will be rework, and there will be that can happen multiple times, especially in last 10 days. So that is there. And regarding the demand details also, there's a dispute, there's a confusion when we are putting the amount in the this case details, when we are putting the amount as per the when we are putting the this amount in the demand. So how do we this put the, just a second, I'll go to the tab also. Sorry, not the amount. When we are selecting the category of case under dispute, so what should be the this GST section, applicable GST rules, etc. So that there we can add multiple cases. If we have ITC dispute also, we have output dispute also in the same case, so we can add multiple categories there. And in the case summary also, we can add multiple categories. There is one issue that has been observed. So in the this demand in the in the order details. So as per the Excel, when we have a, let's say, ITC dispute, ITC denial. So when we select the, in the first tab, order details, when we select the order details as this demand order type as demand order. So the next tab, which is case details, in the case summary, it will only show me option with respect to the when we select the demand order, it will only show me the option with respect to the short payment of output tax, etc., not the ITC. So the Excel template provides some information regarding that you select the order type as recovery order, which is again absurd in this case when my order is not an order of recovery under 79, but demand order under 73 or 74. What should I select in the order type? So if we want to go for the smooth flow of appeal, it's better to select the recovery order. And in the appeal document which we are preparing, in the Word document or PDF which we are uploading, clearly mention that we have selected this. So explain all the things in detail, so that at the time of representation or at the time of the discussion when the defect notice is issued, it is helpful that why we have selected. And one few more things, there are like defect notices currently being issued in the from various benches. Calcutta bench also, Kolkata bench has also started functioning, and so various notices are being issued on some common defects, like the details of this notices and orders are properly not uploaded, or whatever are uploaded, they are either illegible. So many times what we do, just to shrink the size, we compress it either using online tool or whatever. So the words are not clearly readable. So that is one of the reasons of defect. Pre-deposit miscalculation. So it is also seen that when we are making pre-deposit on the portal and we are filing APL 05 on GST 80 portal, there is a synchronization error. Either it takes time of 24 hours or 30 hours. In some cases, it got auto-populated directly. So many a times, this if you are filing the appeal directly without when there is a mismatch in the pre-deposit, as per the APL 05, it stands payable. Either you upload a screenshot of the payment received from the GST 80 portal, or the credit ledger or cash ledger or liability ledger, to show that pre-deposit has been paid, to ensure the smooth this process of appeals. And there may be there are various different issues, but common issues, as Mohit rightly mentioned, that now they are not going into the on those aspects which are not affecting the merits, so they are currently ignoring that. For example, the signature, the second presidential order, I think that was issued in the month of May or April or May. So there they have said that only one verification and signature shall be required. So recently we discussed with the deputy registrar in Kolkata bench. He also mentioned that if entire appeal set, where if there is even one signature and verification, we will process it. We will not issue any defect on that. But post 31st December, that will be looked from the angle of scrutiny. And if all the documents are not properly signed in accordance with the law, it will be returned with a defect, and you have to clear that. So that's from my end. And Mohit, I think we have one query in the chat box also. uh, Mohit, are you there?
Yes, yes. So,
uh,
before taking up that query, there is one more aspect which I would like to discuss, one more issue. That is what is to be put in the date of communication of the order. Because one of the biggest issues of litigation today we have is time barred appeals. And the major cause of the time barred appeals is the assessee did not know. Either he did not check the portal or whatever reason. But due to any reason, the assessee never knew that an order has been passed by the department, and uh, later on the time limitation period got over. So again, that in itself is a very, very long discussion. So I'm not going into that complete discussion today. But whenever we are filing the appeal before GST 80, so see, we have lot of judgments from High Courts today. We have some judgments from Allahabad High Court wherein they have said that just because an order is uploaded on GST portal does not mean that has been effectively communicated. So if let's say some portal was uploaded on some order was uploaded on GST portal in 2024, the assessee got to know about in 2026. Either the assessee saw the order or some recovery proceeding was initiated. That is why assessee got to know. Some due to some other reason, the assessee got to know in 26. Then the and assessee filed the appeal in 26. So there are High Court judgment saying that it is not a time barred appeal because the date of effective communication of order is 2026 only. So but in some cases, we have seen that what the assessee does is the assessees, when they file the appeal, even when they file the first appeal, they put the date of order as the date of communication of order, and they also file a condonation application. So, my only suggestion is whenever there is any such kind of issue in your appeal, and you are going to either you are going for first appeal or you are going for tribunal appeal, always mention the date of communication of order as that date when the assessee actually got to know about the proceedings. Obviously, there should be some proof to substantiate why you are selecting that date, but do not blindly mention the date of order as the date of communication of order, as that can seriously hamper your case.
right,
So,
right.
so I think that is one of the very important things we have to keep in mind when we are dealing with these kind of cases, because we have seen that this kind of self-contradiction can create a lot of problem for the assessee in later stages of litigation, either at the tribunal level or at the High Court or Supreme Court level. So we should keep that in mind whenever we are filing the first appeal or the tribunal appeal. Now I think we can move on to the query. So, Shweta,
The first query is in case of refund order in pre-deposit calculation, we should fill it as zero in demand. Isn't there any specific option to select not applicable as it is a refund case? So I think no, there's no option for, matlab, in my understanding, there's no option for not applicable. Even in the APL 01, the automatically, when we file the first appeal, the demand is zero. So we'll have to go with the zero. Similar is the case for the cancellation of registration or other cases. So that's my view. You have anything different, Mohit, on this?
agreed with you.
Mohit, you're not audible.
Agree with you.
Yes. And second is APL 05, which will be submitted itself as we are feeding in portal and then submitting it. So in upload section, whether we need to prepare a PDF also along with all the annexure again and then upload it mandatorily. It is not mandatory APL 0. If I understand your question correctly, Sweta Agrawal ji, that whether we need to prepare EPL 05 manually and upload it. So it is not mandatory as such when you are preparing on portal, but as a practice in this first appeal also practice wise we do because there is a lot to mention in the portal. Every field has a word limit. You can upload only 2000 words or you can write in particular categories. So for example, the category case category, as I mentioned, in my case, out of those 38 or 37 list, my case would be fit in something. But on the portal, everything is integrated in a way. If you select the demand order, you will not be able to change the category of case to this input tax rate related. So those repercussion will be there on the portal, but in manual we can accordingly adjust those things. So I think it is recommended at least till the portal is not updated to accommodate those changes. Any additional view, Mohit?
Yeah, I think that manual form serves a lot of purposes. So it's not
Correct.
just limited to the portal restrictions or technical glitches. So first of all, this is technology we're talking about. Any form you filled on GST portal, since it is a technology-based form, there is always a chance the data can get corrupted. The form might not be viewed properly. So if you have uploaded a scanned copy of manually prepared PDF form, the tribunal can always refer that form. Second, that serves as an excellent documentation tool, both between, so as a professional, if I talk about, it serves as a documentation tool between me and the client. So as a chartered accountant, as an advocate, I will fill that form, I will send that to my client, and I'll ask for confirmation on everything in that form. So once I've gotten an confirmation on that manually filled form, there is no dispute, there is no scope for any dispute. Similarly, when you have uploaded that manual form, manually prepared PDF form, there is no scope for dispute between assessee and the tribunal. So once you have that form saved somewhere, the scope for dispute also gets reduced. I think it is always all in our appeals. We always upload this form manually as well.
Right, right. Mohit, just one more thing. Like I observed in GST 80 portal recently. So, for example, if I'm having a proprietorship concern, let's say Gopal stores. So, in the APL 05, in the verification, maybe it would be a technical glitch or how it is designed. It is showing I, and instead of my legal name, it is showing I Gopal stores. So that will be so if the I am signing because in one of the workshops recently the deputy registrar mentioned that defect will be issued when there is a mismatch in the name of the legal name, when there is a mismatch in the name. So this is not in my control because I'm not able to edit that name of the person who is verifying that APL 05. But in manual form, I can always mention my legal name and I'm signing with that name only. So these kind of issues, again, it's technical only. But yes, for these purposes, this APL manual form will serve as a good tool.
Yes, yes, and even though they are technical, but tribunal tends to be very technical. So even though
Right.
up to December they have given a relief, but if you see the GST regulations, they have mentioned things like the paragraph should be double spaced. So all those type of things matter at tribunal level. At first appeal level, they might not matter, but when you go to tribunal, so whether be it C stat or IT80, they are very particular about these kind of things. So in future, you are going to see defect memos for these kind of issues. That if your legal name is Gopal Sonika, only a person can sign a document. So
Right.
Gopal Sonika stores cannot sign a document. Only Gopal Sonika can sign a document. So yes, obviously it is better to correct all these kind of technical issues in the manually filled form.
Correct. 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 Any other participant has any other question on anything, whether case laws related to today or any other queries on GST 18? Well, there is one question, I think, which everybody would have, whether there is any chance of extension.
So I think for sure it is not possible to say anything. But yes, considering the number of appeal, so I think official numbers say that 3 to 4 lakh appeals are supposed to be filed, and still the number of appeals which have actually been filed are in thousands only. So only a
19,741, exactly, as
yes.
of now.
So it's hardly what 4, 5, 6% of the appeals which are actually supposed to be filed, and the main reason for that is one of the main reason is obviously the technicality of GST portal and technical issues in GST portal. So I believe for this reason the government should extend. Even the past 3, 4 years we see whenever any income tax extension come, that only comes primarily because of the reason wherever there is a issue in portal. So I believe the extension should come, but considering the past trends, the extension is likely to come in maybe last 4 or 5 days, because the government wants the assessees to file as much as possible. So if they extend it today, everyone will get relaxed.
Right,
So
right.
we should, even if an extension is coming, we should not expect it at least 25 or 26th, and we should work as if no extension is coming.
But Mohit, on a practical note, because uh, GST 80 portal, I think 2 days back I checked, it was getting logged out after every 40-50 seconds or 1 minute. So if these kind of issues persist, especially if the extension is not given on the, let's say, till 25th, so everybody will start filing. And now if the 4 lakh appeals are pending, 4.5 or 5 lakhs, out of the total 5 lakhs, only 20,000, 25,000 has been filed. So that will create a lot of network issue on the portal, a lot of this bandwidth issue on the portal. So in last 5 days, anyway, the only the luckier one would get the smooth flow on the portal and would be able to file. So I think it is necessary for sure. It is practical to complete all the 5 lakh appeals in next 10 days. Very difficult. Uh, if the portal smoothly works, maybe things can turn better for the taxpayers and the appellants. But yes, whether actual extension will come or not can be only whether actual extension is there or not is only dependent on the official sources. So yes, that is there.
What I can suggest is, from your own case perspective, document everything. So
Right.
if the portal is giving you a lot of trouble, it is getting logged out every 40, 50 seconds, create a 3, 4, 5 minute video. Just turn on the screen recording, have a 4, 5 minute video ready. So in your particular case, if there is no extension, if you have proof that you tried to file, but due to portal fault, you were not able to file, so you can get a relief in the later stages.
Condonation will also be possible in that case.
Yes, so that we have already seen in Tran 1. So in
Correct.
later on, they gave the relief to everyone, but at least for 3, 4 years, the assessee needed to have a proof to say that there were technical issues in filing, and only based on that proof they were able to get the relief. So Yes, document everything. If there is any technical issue on the DST portal, screenshot it. If it is getting frequently logged out or some other kind of issue is coming which cannot be captured in a screenshot, then take a screen recording. So whatever way, just document every kind of technical issues you are facing. If you are not able to file before 30th June and no extension is there, then document all the errors you are facing.
And if somebody has to write to, if there are technical glitches, tickets to be generated, do it expeditiously. There's no point of waiting. If it is causing problem now, I'll check it in the evening or maybe I'll check it tomorrow. Don't wait. Create a ticket on the portal. Call helpline. Take as much as help possible as early as possible.
So I think no one has any other query. We have also
So
extended our.
अदर क्वेरीज का दो ही कारण हो सकता है, या तो सबने अपील फाइल कर दी या सब एक्सटेंशन का वेट कर रहे हैं, इसलिए क्वेरी नहीं है.
I think we have also overextended our time a
Yes,
little bit
yes.
because the session got started late.
Started also. हाँ, right.
So, what I'll do is, our team will also share our email ID in the WhatsApp group. So, if anyone have any queries regarding GST 80 filing, they can share those queries. Either they can directly share in the WhatsApp group, or they can send the queries on the email also, and we'll try to resolve the queries to the best of our ability.
So we can wrap up for today, Mohit.
Yes, yes.
Okay.
So,
Thank you,
thank,
everyone.
thank you everyone for joining.